in what is possibly the biggest news for crypto investors in the UK, this means you can buy crypto and put it inside your tax-advantaged pension and ISA accounts, potentially saving you thousands in tax. But before you pop the champagne, there is a lot to unpack here. And as always, it's never as simple as it sounds. And we are also going to bust one of the biggest crypto myths out there. But first, what's changed? Let's back up a little bit here and start from the beginning. So, back in October of 2020, the FCA, or the Financial Conduct Authority, the body which basically regulates the financial services industry here in the UK, banned crypto derivatives for the everyday investor. Specifically quoting this bit here, quote, "The lack of legitimate investment need for retail customers to invest in these products." Now, this was basically an acknowledgement that crypto was this new investing opportunity. They weren't really sure how to regulate it or what to do with it, so they decided to just ban it. And there's this bit here in the press release which is very interesting. To address these harms, the FCA has made rules banning the sale, marketing and distribution to all retail customers of any derivatives, but over time, the FCA has gradually softened its position. In 2024, it announced it would not object to requests to create UK-listed market segment for crypto asset-backed exchange-traded notes. And again, we go slightly further through the timeline, and then in June of this year, they launched a consultation about the ban and if it could be eased altogether, saying, quote, "The FCA is proposing to lift the ban on offering crypto exchange-traded notes to retail investors. Similar products are already available in other countries." Now, this bit here, I think, is a really interesting addition. The FCA recognises that this is a part of a new digital economy where the UK was basically starting to fall behind other countries. And now this ban has been lifted, one of the reasons that it's even included in the press release is this bit. Since we restricted retail access to ETNs, the market has evolved and products have become more mainstream and better understood. And I think it proves that they admitted that they didn't know much about crypto, but also that it's evolved and led them to basically reversing the ban. And frankly, whether you love or whether you just loathe crypto, this is a very telling admission from the FCA. And for those proponents of crypto, that was always one of their big selling points, that the overall market cap of these assets was so big and their integration into the wider financial world at this point was just completely undeniable and has made them absolutely unstoppable. And with the proliferation of crypto in just about every part of the financial services world, it's hard to deny. But because these things are never easy, there are a few things, more than a few things, that we really should explain. Starting with ETNs versus ETFs. An ETF, which some of you might be familiar with, is an investment that just tracks an index or group of companies that are listed and bundled together, like the S&P 500 or the FTSE 100. But there are also ETFs for pretty much every commodity and every kind of market you could possibly imagine. Gold, silver, agriculture, copper, oil, you get the idea. So when you take your money and you put it into an ETF, like the S&P 500 ETF, you're basically buying into a fund that will own a piece of all the companies included in that fund. So in our S&P 500 example, you'll own shares in Apple, Microsoft, Nvidia, Tesla, Berkshire Hathaway, JP Morgan, and the 494 other companies in the S&P. But this is where the differences start. An ETN, on the other hand, is an exchange-traded note. And the note is the key word here. This means that if you were to buy an exchange-traded note that tracks the price of Bitcoin or any other cryptocurrency, you never actually own any cryptocurrency. You don't own any of the underlying asset. All the note does is it acts as a commitment between you and the issuer, where the issuer commits to paying you returns as the price of cryptocurrency goes up. If the price of Bitcoin goes up 5%, you should see your investment value increase by 5% and they commit to paying that to you. So this is a really key difference. You won't own any crypto through an ETN. You'll basically have an IOU from the provider. So basically, in an ETF, you own the underlying assets, the S&P 500 companies that sit within it. With an ETN, it is effectively a debt instrument. It is just a promise to mirror performance. And this comes with a few key differences, but chief among them is the difference in the risk profile, because frankly, between the two, the risk profile is quite different. And it's a really key thing you need to be considering when you're making an investment decision. In the case of an ETN, if the issuer goes bust, you could lose everything you've invested because there's no underlying asset that you can stake a claim to. ETFs, on the other hand, You'll own shares in all the companies in the funds, and so their assets survive even if the fund manager collapses. You will still own shares in the assets in those funds. And this makes this kind of crypto investing a bit of a double-edged sword, because you have basically two layers of risk. You have the crypto volatility itself, and on a day we literally had last week where Bitcoin fell from 122,500 to a low of 104,600 on Friday afternoon, which is a 15% decline in a day. And Ethereum, the world's second largest cryptocurrency, the market value fell by 21% in a day. So you have all that risk and all that headache and all that volatility to deal with. But then layered on top of that, you also have the risk of the issuer of the ETN defaulting and leaving you with absolutely nothing but the screenshots that you've shared in your WhatsApp group of all-time highs. So there's a lot to consider already. And I think that for me, with a lot of these decisions, it's really about understanding what you're buying, the risks you're signing up to, and how this is going to fit into your financial plan. So what does all this mean for crypto investors in the UK? Now, right at the start of the video, I promised to bust one of the biggest crypto myths out there. And it's this. People assume that because there isn't any specific legislation, specific rules from HMRC that are crypto specific about how they're taxed, that they are therefore exempt from tax in some way. This is absolute hogwash, absolute unbridled nonsense, not even close to true. Things like capital gains tax will apply. If it's an asset, you bought it here, you sold it here, you've made this much in profit, you need to pay tax. It's as simple as that. So let's just get that out of the way straight away. But it's also why this next bit is so important. So up to this point, you could buy crypto from places like Kraken and Coinbase and so on, all the usual suspects. But this came with one big drawback. And that was when you sold your crypto, you would be liable for a potentially big capital gains tax bill. And that's where all this is changing. From October the 8th, you'll be able to put it into your stocks and shares ISA and your pension too if you want to. So that tax bill just goes away. Now, those seasoned channel subscribers, the financial veterans of you, will know that the ISA is a tax wrapper here in the UK, which means that you don't pay any income tax, capital gains tax, or dividend tax on gains that sit within your ISA. So it is a very, very tax efficient way to deploy your money. You get an annual limit of £20,000, which resets every year, and if you don't use it, then you lose it. Up to now, this was mostly used for stocks, shares, indexes, ETFs, all that sort of thing. However, you could now, in theory, invest your full £20,000 ISA allowance into a Bitcoin ETN, and any gains would be completely tax-free. But there is another wrinkle here. Obviously, these things are never straightforward. Because even this is changing, and HMRC clarified their position in this statement. Today's confirmation that crypto asset-backed ETNs will now be eligible for inclusion in investors' ISA and SIPP portfolios represents a massive step forward that we believe will significantly benefit investors and savers in the long term. So, yay, great news. But it's not completely straightforward. The crucial paragraph is this bit just below. Initially, ETNs will be automatically eligible for inclusion in stocks and shares ISAs. From the 6th of April 2026, they will be reclassified as qualifying investments within the Innovative Finance ISA. So what that means for you is you can basically hold your crypto inside of your stocks and shares ISA for the next few months. But come April next year, you'll have to hold your crypto in an Innovative Finance ISA. You might be asking yourself the perfectly reasonable question of what the heck is an Innovative Finance ISA? So, long story short, an Innovative Finance ISA lets you use your tax-free ISA allowance while investing in peer-to-peer lending. So any contributions that you make come out of your £20,000 annual ISA limit. The interest that you earn is tax-free, is the long and short of it. But then HMRC went a step further and released this statement to make it even more confusing, saying, quote, "The government will keep the inclusion of ETNs in tax-advantaged accounts under review with a view to including them in the stocks and shares ISA at a later date as the market matures and consumer understanding deepens." Now, hopefully you get it when I said right at the start of the video that there is so much to go through. So at the moment, you can use your stocks and shares ISA for your crypto, but from April next year, you'll have to keep your crypto in an Innovative Finance ISA. But after that, that could also change back to a stocks and shares ISA. Whatever. Why can't they make these things easy? So what's my personal take? Is this a good thing or a bad thing? Since you've made it this far, I wanted to give you my 2 pence worth on this. In my view, overall, having more choice when it comes to investing is absolutely a good thing. but having a more informed choice is even better. And I do have some concerns that the whole ETN, ETF distinction won't be well explained by providers, deliberately or not. And we should also point out that people might be sitting on unrealized crypto gains from years ago. They think that they had better get that money into an ISA sharpish to shield themselves from future gains. They sell, they put it back into an ISA, but then they get a big tax bill because they sold the crypto and realize that gain. So if or how you decide to use crypto in light of these changes really depends on what you want to use your crypto for. And as always, do check with someone who is qualified about what your tax liability might be. In my view, there is literally no point selling, incurring a massive gain, and therefore a massive bill just to move it into a tax-efficient account. It's only really worth doing it, in my view, unless you think crypto is going to go to the moon and hit 1 million. We have a video coming out in a couple of days about how to legally pay less tax on your crypto, so it is very, very relevant to this discussion. Once the video is out, I'll put the link here or subscribe so you don't miss it. We should also point out that there are a bunch of new crypto regulations that are going to hit in January 2026, so comment down below if you want me to make a video on those. But I also really want to know what you think. Is this a good thing? Is it something that should be celebrated? Or is it just adding more competition and even more complexity into an already complicated system? Get in the comments down below and have at it. I want to know what you all think. We have this video here about simple money ideas and this video here about the books you need to read to get rich. If you like this video, please like and subscribe.